Good morning, good day everybody. Hi, this is the webinar, the Fundamental Forex Analysis for June 6th, brought to you by OctaFX, an award-winning broker that has one of the lowest spreads in the industry. Before we begin, a few disclaimers, some housekeeping. So, trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. You should not invest money that you cannot afford to lose. And a hypothetical trading disclaimer. All the information provided in this webinar is provided as general market commentary and does not constitute investment advice. Okay, so a few quick words about myself. My name is Johay Elam. I'm a Forex analyst. I used to be a retail trader. I used to be a computer programmer. I founded Forex Crunch back in 2008, and I focus on the site and also here on fundamental analysis, the big things that move markets. Okay, today on the agenda we have, of course, the stories moving markets. We have lots of stuff to cover, big events to look out for, James Comey's testimony, the ECB event, and the UK elections. Talk about key levels of support and resistance using the MT4, the OctaFX MT4 platform. And we'll do it for all major currencies. And when we talk about the dollar, we talk about dollar-yen, with euro, of course, euro-dollar, the world's most popular currency pair. Pound, with pound-dollar, Australian dollar, which had some nice movements with Aussie dollar. And we'll finish, if we have time, with the Canadian dollar. Okay, top stories in markets. Comey's testimony, which happens today, the statement was already released. It happened yesterday. It's a very interesting document, but basically it does not tell us what we didn't know. So Trump asked Comey for loyalty, and Trump suggested that Comey will not investigate Flynn. So you may say or not say that Trump tried to obstruct justice and he may be impeached. Or not, okay? But anyway, it's nothing that we didn't know. We didn't have any bombshell we didn't know. We had, after the release of the statement, some recovery in dollar-yen, which already fell, and gold fell. It reached already a 7-month high price of gold, but it fell. A new FBI director named. We have some trouble in the Middle East. There's a crisis around Qatar, between Qatar and its neighbors, and there were violent incidents in Tehran and Iran. So far, I cannot say we're seeing any kind of impact on the price of oil. Dollar-yen, we talk about dollar-yen, a few more figures to mention. So, a key American number, JOLTS, for the Fed, it crossed the 6 million mark for the first time since the crisis, and that's of course encouraging for the Fed. Already on Friday we had the non-farm payrolls, which was disappointing, only 138,000 jobs gained. Wages stuck at 2.5%, but the Federal Reserve is still ready to hike. Where markets are pricing a 95% chance of a hike. Why is that? Because the Fed told us so, because the Fed remained silent. That's why we're expecting a hike. And it could be a dovish hike, raising rates now, fully priced in, fully expected, but telling us that the next hikes will take a long time, and this could have a negative effect on the dollar. So we could see the Fed raising rates and the dollar falling. That happens next week. Another figure to mention, Japanese GDP was downgraded to 0.3, quite a significant figure, but as we know, Japanese figures have little impact on dollar-yen. It's mostly about the dollar. Okay, the next big events, we have US jobless claims today at 12:30. Comey's testimony at 2 GMT. Again, the statement is already released. First, we're going to hear from him, reading out the statement, then we have some data. Well, before that, PPI. After that, next week, Tuesday, we have the PPI. And Wednesday, we have retail sales and the CPI. And but the big event for next week is the Fed decision on Wednesday at 6 GMT. And it's accompanied with by new forecasts and Yellen's press conference. Let's talk a bit about James Comey. He was the former director of the FBI. His session begins at 2 GMT. It's broadcast live on all major US networks. It's going to be a very dramatic event. It's going to be followed by a closed session, but don't worry, there are always leaks from these closed events. Senators like to talk to the press. The big question is, did Trump tell Comey not to investigate Russian ties? Did he try to interfere, to obstruct justice? That's the main question. Probably Comey will stop short of saying a full yes. We'll just say what happened and leave the analysis for others. And Democrats can say yes, Trump did a major offense, he should be fired, should be impeached. Republicans will say no, he didn't say anything serious. Anyway, and the investigation, an independent one by Mueller, former director of the FBI, is going on quietly in the sidelines. Okay, so assuming Comey does dodge the hard questions, that's the baseline scenario. There's going to be a big political drama, but no long-term dollar impact. Nothing we didn't know yet, okay? If Comey clearly says Trump obstructed justice, then the dollar could fall, and it's a danger, could lead to impeachment down the road and to slower growth, because we expected Trump to provide us with infrastructure spending and tax cuts, okay? And if Comey sort of acquits Trump, says basically Trump didn't do anything, then the dollar could rally because it would be a big relief. It could enable the administration to continue with tax cuts and infrastructure, okay? Infrastructure is on the agenda this week. I'm mentioning this because nobody's talking about it, everybody's talking about Comey. So that's why it's so important to watch out for these political events. Okay, dollar yen in general, it's the most sensitive currency paired to US indicators. It rises with the chance of rate hike, falls when Trump is in trouble. Yesterday we learned that Trump is in less trouble, at least according to the Comey statement. So dollar yen went up, less trouble for Trump. It falls on geopolitical worries. Again, there was something around North Korea, but it wasn't a major event, so we didn't see any major impact. And now let's look to the charts. It's the MT4 platform on the OctaFX system. So currently we're at the 109 level, 109.69. We already got close to 110. Resistance awaits at 110.20. Further resistance is at 112.10. And the crucial level, the cycle high, is 114.30. Looking down under current levels, 109.69, we have 109.10, which was the recent low seen just yesterday, followed by 108.10, which was the cycle low. So these are the big levels to watch. All in all, we're seeing some kind of a downtrend in dollar yen, but it's not as clear as, well, the uptrend that we see in euro dollar. Let's continue. So our next currency pair is the world's most popular currency pair, euro dollar. The big event is today, the ECB. Yesterday we already had, we talked about this on Tuesday, about some leaks reports. It came out yesterday. There were reports that the ECB will lower its inflation forecast to 1.5%. We've seen euro dollar plunging all the way to 112, but bouncing once again. Lots of uncertainty, okay? In general, markets are worried that once again Draghi is usually dovish. Dovish Draghi will drag the euro down. We'll try to say something to keep the euro down. A weaker euro is good for inflation, good for exports. That's what the ECB wants, more economic growth. Okay, another figure was disappointing yesterday, also hit the euro. German factory orders fell by 2%, more than expected. The next event is today, 11:45 GMT. The ECB makes its decision. But more importantly, the press conference by Draghi, sometimes called the Draghi Show, begins at 12:30. Further figures, we have German trade balance on Friday at 6 GMT. Next week we have the German ZU business survey. So the ECB, let's focus on that. No changes in QE or interest rates. So don't expect any announcements regarding that. The big focus is on the statement, the stance of the ECB, their assessment. If they say that risks changed from the downside to balanced, that's what we're expecting because the economic situation has improved. And they released new forecasts, and after the report yesterday, they become more important. So if the ECB downgrades its inflation estimates for the next 3 years, it's going to be a bit negative, but this is already priced in, okay? We have to watch out for Draghi's tone about the economic situation. If he's happy about growth and worried about inflation, that's what we already know. If he's more upbeat about inflation, it's good for the euro. More worried about growth, of course, negative for the euro. Can we expect any hints about QE tapering? That'll probably come only in September. So now he's only setting the stage for a bigger announcement in September. So to conclude, how we can trade this big event, if there's a change in how they talk about risks and a downgrade of forecasts, all priced in. The euro could wobble, could jump up, could jump down a bit in range, a bit choppy, but the trend remains to the upside. No big movements today. Uptrend continues. Okay, if there's no change in the assessment, if they keep it to the downside, then the euro goes to the downside, the euro falls. If there are any concrete details about QE tapering, again, we expect that only in September, but if we have something of substance today, some announcement, then the euro jumps. Again, not priced in, not expected, very unlikely. Okay, in general, bigger trend for the euro is an uptrend, very clear, since the French elections mostly. Growth is stronger in the Eurozone than in Europe, and politics look more stable, especially today with Comey's testimony. And the big events are ECB today, the Fed on Wednesday. Okay, since an uptrend since the beginning of the year. Let's look at the euro-dollar chart again on the MT4 OctaFX platform. Again, we're approaching the lows. The highs. 112.84 is critical resistance. We've seen it as a double, as a triple top. Look how stubborn this level is. We have to the upside 113, which was the swing high on the US elections. Above that 113.60, a line seen back in September, and 114.20, which is already high resistance. To the downside, we have 111.60, okay, just above the levels, below the levels we've seen yesterday. 111.10, 110.25, and then 109.50, the initial post-French elections high. The critical support line is 108.20, which is, as you can see on the chart, a line that we've seen a gap on. Okay, let's continue with the third big event of the day, coming from the United Kingdom, from the UK. So it's a mess. Some polls, opinion polls, we have elections today. Voting is open now. Some election polls show us a very tight race, conservatives leading by 1%. Some polls show 12%, high uncertainty. But we're sort of looking for some result in the middle, which is 6 to 7%, which means an absolute majority for the Conservative Party, continuation, what markets like, certainty. Last minute polls show stability. So during the campaign, we had at the beginning a big lead for the Conservatives, for Theresa May. Then things narrowed down, and in the past week things did stabilize around an average of 6 to 7%, but again the average does not reflect the wide array of polls. You can say, okay, Theresa May stabilized on one hand, on the other hand, opposition leader Jeremy Corbyn enjoys very big rallies. So, in general, markets want a Tory landslide, a Conservative landslide. That could lead to a softer Brexit. May, the Prime Minister, will have more room for maneuver. A small majority will be okay now, that's more or less priced in, but Brexit worries later on could turn the pair down. A hunk parliament is a nightmare scenario. Nobody is expecting a Labour victory, but a situation in which a coalition needs to be built is less political stability and more uncertainty, and it could hurt the pound. On the other hand, if we have a coalition that is more pro-soft Brexit, so we could have an initial big fall in the pound, 300, 500 pips, but then things could recover. So the initial reaction is not necessarily the final one or the long-term one, similar to the non-farm payrolls. Okay, so if we have an outcome at the end of the night, 6 to 7% lead for the Conservatives, that's basically priced in. The pound could, jump up and down and later fall, because this could lead to a harder Brexit when negotiations begin in the next few weeks. If it's a 10% margin or higher, that's a landslide majority. It's good for the Conservatives, and the pound could rally. If it's 3% or less, that's a hunk parliament, and again, the pound could fall a lot on high uncertainty, but things could change later on. So today, voting is already open. It's a bit early in the morning. In general, if we have a high turnout, that means that younger people are going to vote. Younger people vote more Labour. In general, I'm making big generalizations. and it could be negative for the pound. If we have a low turnout, it's the older people that are more consistent, and it's better for the pound. But we're waiting for the results, not only for the turnout. Voting ends at 9 GMT. That's when we'll have the exit polls, okay? They come on very thin liquidity. Only Australia and New Zealand are open, okay? So you could have big swings in the pound. Initial results are expected at 11 GMT, midnight in the UK, usually from Sunderland, okay? Not necessarily indicative of what's going to happen. And then when Tokyo opens more or less midnight, Tokyo opens exactly at midnight, but more or less at this time we begin getting a flow of results. Okay, so these are going to be the busiest hours during the Asian session. During the night until about 5:30 GMT, results will continue coming in, and the picture should become clear. Should become clear before 5:30, but if it's very close, it'll be a very dramatic night. And at 7 GMT, we'll have the full market reaction when European markets open. In general, pound dollar, so far in 2017, the pound looks better than the dollar. We're back to the post-Brexit range, but the pound is still vulnerable, okay? Let's look again at the MT4 chart for pound dollar, talking about the big levels here. So very stable at the moment, 129.70, nothing, a bit higher in the recent range. To the upside, we have resistance there at 130.50. That was the cycle high, okay? We're getting close to this high. Above that, 131.30, even higher, 132.50, and the high line is 135. We're not expecting to see that after the elections. And looking down, we have 129.25 as initial support, 128.40, very crowded space over there. Then 127.75, which is already strong support. Below that, 127, 126.15, 124.50, and 123.50 if we have a big shocking surprise. Also, probably will not see that, but we never know. We had, remember, Brexit nearly a year ago. The pound fell over 1,000 pips. I would say 1,600 pips. So who knows? Probably not going to get the same dramatic reaction, but it's going to be more volatility than we've seen right now. Okay, let's continue with the Australian dollar. We had some good news from Australia this week, and this helped the Aussie. Australian GDP beat expectations, rising 0.3. That was even better because the reaction was positive because expectations were lowered by the central bank. So price action depends a lot or always on expectations. Other figures, Australian trade balance missed with a bigger deficit than expected. Chinese trade balance, on the other hand, Australia's main trading partner, came out at a higher growth than expected, 15.5% year over year. More if China is more active, that's good for Australia. The next big Australian events, overnight we have Chinese CPI, a bit of more of a minor figure. Next week we have the industrial output from China. If China produces more, it needs more Australian metals. And on Thursday next week, sort of a heads up, the Australian jobs report, of course, critical for the Australian dollar. We're beginning to see this week a change in the Aussie dollar after falling since March. We're seeing a more significant uptrend, okay? The Australian dollar is enjoying strength, ignoring some weak Chinese figures. Luckily, tonight we also had a positive Chinese figure, and that helps. And, but still moves are more subdued in the past. Let's look at the Aussie dollar chart. So here we are, MT4 platform. Currently a bit of stability in, sorry, that's the Canadian dollar. Here we are with the Australian dollar. You can see the downtrend since somewhere in March, but then beginning to see a change, of course. Maybe we have bottomed out, still waiting for confirmation, but it's more than just a dead cat bounce. It's already some kind of an uptrend. So from current levels, we can look for 76.10, a very strong level of resistance, followed by 77, a round number, and then immediately afterwards 77.40. Even higher, 78.40 is the ultimate high. To the downside, 75.15, 74.10, 73.75, and 73.25, the recent low. If we look even lower, then we see 72.50. But all in all, as you can see, we're posting here higher lows and higher highs. Okay. And let's go quickly on talk about the Canadian dollar. Had some figures from Canada. The IVPMI missed expectations. Forward-looking index shows us lower chances for growth, 53.8. Canadian building permits also missed expectations, falling 0.2. And oil inventories, yesterday they showed a build-up in inventories, so that was also a negative for the Canadian dollar. But we're seeing a very stable Canadian dollar, also called loonie. Today, Thursday, we have the new home price index, and housing is important because of worries about the Toronto market, which prices fell there in May after rising very, very sharply. So there is talk about the burst of the bubble, and it could impact the wider economy and the currency. And tomorrow, the main event of the week for the Canadian dollar is the jobs report, this time published separately from the NFP, so it should give it more space of its own, more impact. Okay, next Friday, a heads up, we have retail sales in Canada. In general, once again, for the second year in a row, Canadian dollar had a weaker start to the year, but then it managed to stabilize, find its area where it doesn't fall anymore. Dollar CAD reached highs. I think it's still looking for a direction, no clear trend. Let's look quickly at the chart. So yeah, we've seen an uptrend of dollar CAD. That's of course the fall of the Canadian dollar, but we've seen some stability. So quickly, the lines from top to bottom: 137.90, the cycle high; 136.40, 135.40. We have support very close at 133.80, and then 132.20, and the ultimate line of support is the very round number of 130. Okay, so that's it for today. Thank you very much for coming. Wish everybody a safe and successful day in the markets. It's a huge day called Super Thursday. Comey, UK elections, and the ECB, all major pairs have big market movers. Trade safely, and again, any feedback and comments are more than welcome. So that's it. Thank you very much, and see you soon. Bye bye.